Since October, the central bank has been acting in line with expectations. But this time round, the RBI went against the trend, keeping key lending rates unchanged. The bank rate remains at 6%. The repo rate is unchanged at 5.5% and the reverse repo rate stays at 4%. The central bank, however, extended refinance facility to 30th September from the earlier deadline of 30th June. The facility is for meeting the funding requirements of mutual funds, NBFCs and housing finance companies through relaxation in the maintenance of SLR up to 1.5%. But the RBI governor has said the central bank will step in and make rate cuts if needed.
We will continue to monitor the domestic and global situation and will take action as appropriate at the appropriate time.
Keeping in view the global economic gloom, the policy stance was pessimistic. The growth forecast has been dropped to 7% compared to 7.7% earlier. This is keeping in view the slowdown in industry and services sector. The inflation figure estimates now stands at 3% by the end of March 2009. Earlier, the projection of inflation by March 2009 stood at 7%. The RBI governor warned that year 2009 will not be an easy one.
Global growth for 2009, the number was 3% in October 2008, 2.2% in November 2008, and I believe another number is going to come out day after tomorrow, and there are some indications that it's going to be substantially lower than that.
The policy stance also included provision of comfortable liquidity to meet the required credit growth, responding swiftly and effectively with all possible measures as warranted by the evolving global and domestic situation impinging on growth and financial stability. Ensuring a monetary and interest rate environment consistent with price stability, well-anchored inflation expectations and orderly conditions in the financial markets.
Unlike earlier, this time the outlook of RBI was more grim and there was a renewed sense of concern within it. Initial hopes that the crisis would be contained within the financial sector alone was replaced by the stark reality that it had indeed transmitted into the real economy.
RBI also took note of the fact that the response to its rate cuts over the last several months is still unfolding and the response from banks have been rather subdued. With Ronak Koteja in Mumbai, Shweta Bajaj, News X.